we're off to the races. Welcome, everybody. Sorry for the technical problems, but we're all good now. We're going to knock out our standard disclaimer. We're going to get off with the on with the webinar tonight. This is a Thursday night webinar. Topic is trading the open with the equities, gold, and crude. Standard disclaimer get taken care of first. All communications from Viper Trade Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including live trading room, are to be construed as investment or trading advice. And of course, everybody here does know that you do trade at your own sole discretion. So what we're going to do now is we're going to kick off with some equity charts. And in particular, I'm going to go with a YM and ES. We're going to then introduce gold and its relationship and correlations to the equity markets, and then we're going to wrap up with crude oil. So without further ado, let's get over to screen one. Now, for some of you that are completely new and visiting on an open house, you may be looking at this for the first or second time, or maybe you've come into a couple of live webinars. So let me just explain what you're looking at here, and I'm going to try to keep it nice, not too complicated, fairly high level, but at a level that you can understand very quickly. And so when you come into the room, things will make sense to you. Okay? I'll also work on a little bit of terminology too, so when you hear things called or mentioned or discussed about what kind of trade there is, you'll know what we're talking about. So we are connected to a data feed to our broker, and we trade futures markets intraday. We are flat at the end of the day. We don't carry overnight positions. This is not your buy and hold Apple and your IRA account program. This is trading short-term volatility on futures instruments. Now, futures are somewhat tied to the cash market prices. So if you went and looked at the level that the Dow is at, so the YM is the E-mini Dow contract. Each tick of movement is worth $5. We trade 4 range bars. That's 4 ticks. Each bar is 4 ticks in size. We don't trade time-based bars because what we found over the years is that sometimes they become somewhat distorted. What I mean by that, and if you traded minute or 3 or 5 minute bars, you will notice that the bars will clump together very small for some period of time in low volatility. Excuse me. All of a sudden, you'll get a huge spike bar. It'll throw all the indicators out of whack. And so we moved away from that a long time ago. And the range bars are a lot smoother. And you can trade another version of these called Renko bars. There's various types. We have Object Trader Renko bars. They're very similar. And so the way it works is this, is that you have these indicators that are called background colors, bar colors, blue, yellow, and red. We have the predictors, which are the swing levels, and Gary has those turned on in the live room. We have the power meters. This is the trends. There's 4 different trends on each chart, short term and long term. And when they're all in sync, you're in a good trend. Characteristic, and of course you have the bands. The bands are the mid band, and let me blow this up so you can see what I'm talking about here. The mid band is the thick line in the middle. And there are 1, 2, 3, 4 bands below it, and 1, 2, 3, 4 bands above it for a total of 8. The thin red line on top of band 2 is called line 2. The thin green line on top of band 6 is called line 6. Each one of these 3 lines feature prominently in our trading. And we use that to see and enter and take trades. Now, markets go, as you know, from 3 different types of directions. Characteristic of a, and there is a what we call sort of an intermediate color in between red and green, which indicates that you are sideways in a range-bound condition like you see right here. So let's look at some quick examples of how you can quickly discern what the market's doing and what kind of trades you might take. Over here you can see it was not trending. Just to give you a sense of time wise, I am here in California, so I am on the on a Pacific time zone. So midnight Pacific time was right here, going into the morning of the 7th, which is today. Today's Thursday the 7th, okay? Right here. That's midnight. Now, from about 5 o'clock, which is about the time, 5:30, the overnight session is called the Asian session. So all the markets are busy in Asia. All the big banks in Hong Kong and Singapore that trade futures are actively trading futures in here. So if you look at the futures overnight in the Asian session from last night, what direction was ES going? Up, down, or sideways? Between here and here. U for up, D for down, S for sideways. Between here and here. What was the direction on ES? Up, down, or sideways? So for these earliest questions, I'm just going to give you 5 seconds. 2 seconds. 1 second. The trend was up. Yeah, YM. Okay, did I say ES? I got a yes on the brain. My apologies. This is YM. This is the mini Dow, $5 a tick. YM. Yes, the trend was up. Right. Okay, so let's break this down. Characteristics of an uptrend are as follows: higher highs and higher lows. The mid band and all the bands are stair stepping up. The bars are predominantly blue. In a powerful uptrend, you can be putting in fresh highs. Now, I have an extra indicator on here. I don't want this to throw you off, but this is the current day open high low. This doesn't show in the live room. Gary doesn't use this indicator. I do. I find it helpful. And the way it works is as follows. You have the market open, which is this dashed black line. You have the market low for the day, which is the dashed white line. And the blue dashed line, which is shown right here, is the high of the session. So when you're in an uptrend, a very powerful uptrend, what can you notice about this upper blue line? What is it doing? It's stair stepping up, right? Because each time you push that, that's a fresh session high, session high, session high, all the way over to here to where you pull back off of it, and that remains the high right there. See it? Now, let's talk about trades. When you are in an uptrend, as you were overnight here, you are primarily looking for long trades only. You're looking to buy the market on what we call retracements. So you hear that all the time in the live room. Gary says it, I say it. It's pushing the high. We have to wait for a retracement. So let's take a look at what retracements are and how we trade them. This is a 24-hour session period, right, Kurt? So this open corresponds to the 1:30. So here I'm California. The session starts at 1:30, so it closes momentarily from 1:15 to 1:30 on all the futures markets. They close momentarily for like 15 minutes, and then they reopen at 1:30, and then it runs to the next day at 1:15. So that's what this dashed line is. So when these lines move, over here, for instance, you see when it was breaking down before the Asian session, it was putting in fresh lows. You were below the open. Here's the open right here. And you were breaking down. So these was shorting opportunities. But I'm not going to cover that. I'll talk about shorting in just a second. Okay? Yeah. Okay. Yeah. So retracements. Okay. So let's look at retracements. So this is sort of this part the topic we're covering right now is sort of the meat and potatoes of our trading system and how it works. Now, I'm going to show you 3 trade entry types, but in the beginning, as you learn this, you really want to focus on one and practice the other 2. So I'm going to really blow this up really super big in this Asian session from overnight and talk about how to enter these trades. Okay? The mid-band trade is defined as follows. Anywhere in the band directly above the mid-band any bars that come into the band below the midband, and or any bars that sit on the midband itself. Now on the surface, you might say to yourself, well, you know, Charles, that seems pretty straightforward to me. So here's the rub. Here's where it gets a little more complicated and starts to complicate things. As these retracements are occurring, each one is a little bit different. And some of them are going to go deeper than others. Some of them are going to be more shallow than others. Some of them are going to come close to the midband. Some of them are going to, like this one right over here, are going to sit right on it. Here's an example of another midband trade right here. So you got to think of it this way. When you're in an uptrend, you have this notion of what's called the thrust, which is the push in the trend direction. In this case, that's up. And the retracement is the pullback in the other direction here. So in this, when you have a strong, powerful uptrend like this, you are not shorting this. Just to be clear, you are not taking shorts. We don't want to swim upstream. We don't want to take counter trend trades. We trade with the trend. In this case, it's up. So let me ask, now that you know what you know, is this a midband trade on YM? Yes or no, right here? What say you, team? By the definition that you just heard over the past 2 minutes, is this a long trade on YM? Yes or no? Midband. Long midband trade. Yes or no? These bars. Now they're red. Uh-oh. We might be going down. And while you're thinking about that, I'll give you 5 seconds. I've added another indicator here that I like to watch called volume up down. This is a standard out of the box ninja indicator. This isn't something we created. You can just go in and stick that on there. I usually tuck it down low like that. I don't really pay too much attention to it unless I'm looking for some turning point in the market. All right, time's up. Yes. So by definition, let's go back over here to our little illustration. Anything above the midband, directly below the midband, or on its midband itself is a midband trade. So by definition, this is a midband trade. Okay? So what I would suggest for anyone learning how to trade this, to focus initially, and this isn't going to be forever come to pass how you're going to trade, but you really want to focus on midband trades. Okay? In the midband, on the midband, around the midband. And it's very simple to do. You can do market replay. You can just, the simplest way that I've seen to do it is you just take a trade that you see that's obvious, okay? And you just toggle back and forth. So you get the sense of what it looks like. So here's looks like that. You toggle it, you see it. Okay, there's one sitting right in the midband. I see it. I see how that works. Bring them back over here. Okay, this one a little deeper. This one a little deeper. This one a little deeper. I see it. I see it. And then just go back and forth. Look at different types of midband trades. Look at, just toggle back and forth, toggle back and forth. And once you get some good muscle memory on that, then you can start to take them in sim. Okay? All right, so that's examples of longs in an uptrend. Now, I'm going to talk generally about the trade entries, which we like to do, but you can have variations on this. When Gary draws a box on the chart, what he is showing is the use of our object trader tool. If you've not seen it, he showed it in the room several times, and there's webinars dedicated on how to use that tool. It's a semi-automated strategy. It's a little panel that sits on the right-hand side of the chart right here, and we've been building it for the past several years. There's been lots of modifications to it, and one of the main functions of it is to engulf the bars with what we call a region box. So it's a rectangle or a square that engulfs the bars where you want to take the trade. And the way it's built is that one of the main components, it has lots of components to it, but one of the easiest to learn is that once you engulf an area and a bar closes outside of that area, in this case you would enable long only because it's an uptrend, right? So this bar closed outside of the box. And what Object Trader will do is it'll fire a market order on the close of this bar right here to get you long with however many contracts you put in there. If you have one, you can use one as a runner because you want to maximize how much money you make out of a trade. Most of your money on your trades are going to be made by the runners. You want to try to get a win ratio of 2 or 3 to 1. You want your success rate to be up in the to strive for 70, 75, or 80% win rate. And in order to do that, you've got to catch some long runners. Now, so what it's going to do, let's say you put 2 on here. You're long from here, the close of that bar. Normally, your initial stop is 10 to 12 ticks, so you measure down 10 to 12 ticks, so we'll automatically put that stop for you here, the 2 lot. You're going to want to put a scalp target up about 8 to 10 ticks, 6 or 8 or 10 ticks. Each instrument's a little bit different. Usually that's going to correspond with a swing level at the outermost top of the 8th band. From here to here, it's normally 20 to 24 ticks. You're rarely going to get right on the midband. You might occasionally do it if you put a buy order right in here. That's another way to get in. You don't have to use the OT tool. We recommend that you do, but there's another way to get in. Obviously, you could put a limit orders right here. And when that breaks, now you're long. Your initial target is here. Okay, so then it's OCO. OCO, one cancels the other. So this initial stop goes down to 1 because you took one off here, right? Remember? And then you engage the trail. Now, the way the trail stop works is, can you see the green little sort of snaky line here following the market up? That's our stealth line. And you see the thin green line at the top of band 6 called line 6. Notice how these two very closely track the market. Okay? So what happens is you can program OT to do this, or you can manually do it yourself. You want to track it up like this. See it moving? See, almost got you there, right? See it? See, pull back a little bit. Going up, fresh highs, fresh highs, fresh highs, fresh highs. And then probably somewhere in here, it probably wicked you out. So that's the trade. So, and the other thing that I forgot to mention is from that initial stop, what you want to do, and this is what we've taught this for years. So you start off with the 10 to 12 ticks on the 2 lot. Once the scalp is taken off, the remaining contract should be taken to within 2 to 3 ticks of the open, and then begin the trail. We do that because we want to have a free trade. We strive to get a free trade. A free trade is when you've already captured maybe 12 ticks on the scalp. You have your remaining stop 3 ticks below there, and who knows, a tweet or some news comes in, market tanks and rips through here, you still net 9 or 10 ticks. That's why you do that move right there. Now, I'm not going to, that is the trading methodology that we recommend for pretty much almost every trade. About 10 ticks. Now, the exception to that is ES. 10, 12, 15, 20 ticks is a big move on ES. Scalp targets on ES are normally 4 or 5 ticks. And then you engage the trail. Okay? High flyers like YM, NASDAQ, Russell, and gold and crude, you can go 8 or 10. Yeah, because if it's going to pop, you're normally going to get that. So let's look at the numbers here. And then I want to go look at the short side. If you're filled at the midband here at 514, 10 ticks would put you at 524, which would be right here at line 6. On the limit order fill, just above the midband, right here. If you got filled on the close of this bar at 17, 10 ticks would put you at 27, which would be up right in here, just underneath the swing. So you can see that that's your scalp target right in here. This is the meat and potatoes of taking these trades. Every trade, long and short, should be administered in this fashion. Now, you can trade more. You can trade 3 lot. You can put 1 lot on the scalp, 2 lot on the scalp, trade the one, trail the 1 and the 2. I normally trade a 4 lot. I'll scalp the 2 and trail the 2. In a similar manner as I have described here. Any questions on the long size? Oh, two is good. You really, this, what we are describing here is the basic, I would consider sort of the basic methodology of entering and trailing and exiting your trades. Yeah, you want to, now, ES and YM are somewhat controlled in their retracements. If you went, and I'm not going to have time for this, unfortunately, but I'll have time on Saturday morning. I'll get into the other more volatile instruments like Russell and NASDAQ, where their retracements and their pullbacks are very deep, sometimes way down into here. It won't pause here. It'll just pull all the way out. You get all sorts of red bars, and you're thinking the trend's going to change, and then spazzy. We used to call it spazzy because it's so spastic, and then spazzy just takes off like a bird. You would have to manually move it, so like I've shown here with this movement of this line, if you did not engage Object Trader and you put buy limit orders here, you would have to manually put your stops down here, which isn't a big deal. You can do it. And you have to put your target here. And then I would suggest on a powerful move like this, you put another target way up here, like 50 ticks away, and then you trail manually. So you see how I'm following line 6 and stealth up. See it? So you follow it, and then probably wicked out right there. The power meter is, if you use the template that we give you from what we use in the room, it's automatically, power meter's right there. It's always on. It's always on. So this color configuration you see right now at this moment is not indicative of this move right here, because it's looking at the current bars. In the case of the real-time power meter configuration in this move would be solid green. All the way up, solid green. Yeah. So sometimes you might hear us say looser stop or fade that by a little bit. And what we're talking about there is that some instruments have a propensity. See this, and let me use an example, like right here. Can you see how this pull back and just sort of wick stealth above line 6? Sometimes it's quite possible that if you're too tight on your stops, you just had a little bit too tight, it nicks you, boom, takes that runner out, and then runs another 20, 30 ticks. So you don't want to do that. You don't want to be Mr. Scrooge on that. You want to fade it by a couple ticks. Let the market wiggle around a little bit, capture the full meat of the trade. Here we got that? Okay. I don't see any more questions. Now let's look at a downtrend. For this example, I'm going to use gold, which was in a very strong, powerful sell-off downtrend today. If I can find that gold chart, where the heck did I put that thing? Where in the heck is Goldie? Ah, here it is. Okay, stand by. I'm loading the gold chart. Let's get this full screen. Let's clean it up a little bit. That's all kind of stuff on here I got to take off. Just 1 second, please. I have a gold chart up here for you. So this is today on gold. I'm going to use this as an example for how to trade a very powerful downtrending market and how you might take entries on the short side of the market, which is, if you think about it this way, what I'm about to show you is that the entries are similar to the long trade entries in an uptrend, only reversed, because you're selling the market, right? You're selling the market. You're not buying the market in a downtrend. And let's look at when the selling began. Here is gold from today. Stand by. Checking visual, audio visual. Is everybody seeing a gold chart? Cursor moving in a circle. Cursor moving in a circle. We all good? I don't really have anything against the predictors, Rogers. I mean, I like the predictors. What I do with the predictors is, I know when I do teaching on these training webinars, I take them off sometimes, mainly because I think that when I'm trying to show something, it makes it like just a little bit, busy. When you're trying to explain something, it just makes it look, I think it's just a little cleaner and easier to show something with predictors. I toggle them on and off all morning. When I'm trading, normally they're off. But if I want to see some swing levels, I'll turn them on. I might put a line or mark something somewhere when it's moving, and it helps, with targets and where the support and resistance are. Now, let me give you orientation here. Gary opens the live trading room at 5:55, so that's just before 6 a.m. Pacific, right here. So at the time that this happened, going into 6:30, 6:30 is when the U.S. equity markets open right here. By the way, there's another thing I look at. I'll just give you some more of my tips. I have the service that I have here. I have DirecTV, and it has a Bloomberg channel on it. I turn Bloomberg on first thing in the morning, and the first thing I write down, I physically take a piece of paper and I write it down. I write down the Dow futures. I write down the S&P futures. Sometimes I'll write down the NASDAQ futures. So let's do, for instance, I look at the market, and the Dow futures are up 152, the S&P futures are up 12, and the NASDAQ futures are up 38. I believe that's the numbers from this morning. I don't have the paper right here in front of me. And then I come and I look at the equity markets, and they're trading just off the highs of the morning. Now, why would I do that? Any idea? The questions are part of the presenter. I have a presenter panel here, and part of it is the questions. I'm looking for market directions. I'm looking for trends. I'm thinking about correlations. I'm anticipating what the market might be doing that day. So just, you don't have to do this. If you don't, you can use CNBC. There's lots of market channels. There's MSNBC. There's all kinds of channels. There's Cheddar. I think there's one called. Just anything where you can see what the futures overnight were doing. And then I'll usually take this piece of paper. I'll mark down the high of the S&P and the low futures, the ES. I'll do the same with YM. I'll do that for NASDAQ, and I'll do that for gold. And then I look at the relationship of where the open was versus the high or low and where it's currently trading. Now, one of two or three things are going to happen from there. In the case of a powerful uptrend, was MarketWatch. You can do it too. You can do it online in MarketWatch. I think Yahoo, Finance Yahoo. There's lots of places to get that information. So as I'm anticipating what the market might do at the open, I'm thinking to myself, okay, it's up, way up. That's a lot. Okay, that's some big up markets. We could get market continuation to the upside and continue to push higher. So I have to be ready for that, right? We might get a pullback, and we could be looking for retracements to the midband to get long. Now, there is one other thing that can happen. If you're thinking of the three things that could happen, right? It could reverse, right? It could pop the top, reverse, come through the midband, and start to sell off. So you have to be ready for those three market directions, okay? Do you have any max 4 levels when you want to stay out, best to stay out? I tend to avoid chop, Brent. We teach how to trade sideways markets, and sometimes you can trade those. If the trend is up in your sideways, you want to take longs from the bottom. If the trend is down in a range, you want to short the tops. Normally, that's one market that type that I try to avoid. I prefer waiting and trading trends. If something's really choppy, like let's say ES is choppy and YM, Russell, and NASDAQ are moving and crude's moving, but gold and ES are sideways, I would look to other markets to stay active. Now, what happened was at the open, as you recall, and you looked at YM. I don't know if you saw YM. In fact, let me do a quick correlation between these two on this morning. Stand by. I've got the YM chart right behind Goldie, and I want to show the two together, which will illustrate some correlations that you're going to find very helpful. I'm just going to tuck the ES away just for the moment. I'm going to zip YM forward to this morning at the open, which is right here. Stand by. Hold on. Let me get YM at the open here. All right. I want to show you something here. It's going to help you a lot. See, I think I mentioned that I'm pretty fortunate in the fact that over the years I've built this trading setup right here where I have 4 huge screens, so I can look at all these markets, and everything is very clear when you look at it because they're just the charts are just huge. Okay, stand by. I'm almost ready. So if and I'll tell you what, you can get a nice flat panel screen now for like, I don't know, 125 bucks. If you're going to spend any money, get yourself a decent graphics card and get a couple of nice monitors. It's going to make a huge difference in how you see these markets. If you're trading on a small screen, I just have to tell you, a word of caution, it's going to be tough. It's going to be more challenging. Let me just put it this way. All right, let me get some orientation here. All right, we're ready. We're almost ready. I got you. I got you. There you go. Okay. Here we go. So the 630 line on the left corresponds to the 630 line on the right. Let's get these out of the way for now. The power meters, like I said, when you're in, some of the easiest ways to think of the power meters is that when you're in a powerful trend, the colors will be aligned. So in the case of the gold sell-off, these would all be completely red. Nothing would be green, and you would be in a strong, powerful downtrend. At the same time, while the YM was going up, these would all be green, and these would all be red. Now, what was YM doing at 6:30 when the market opened? Well, furthermore, before you even got into the 6:30 mark, what was the trend direction on YM here? Before the market even opened, what was the trend direction? We checked Bloomberg. We saw the Dow futures were up 152. We have a green background. We got a lot of blue bars here. And I don't know about you, but I see higher highs and higher lows. Now, in stark contrast to that, what was going on with gold at 6:30? It was getting a double top right here, remember? So what I did was I was looking to buy YM on a retracement, and I was looking to short gold. I actually shorted gold way up here. I know that was a gutsy move because at the time I did it, it was counter trend. Why would I be able to short it here? Why would I short gold here? Seeing what's happening over here. What's happening? What's happening to this blue dashed line? Which way is it going? Up or down? Right here. Up. What does that imply for gold? Down. It implies that gold's going to go down. Now, let's say that you didn't short this up here, which was extremely aggressive. But I'm doing this a long time, and I had a tight stop right in case it blew out against me. Notice what it does right here. Now, this is 640 to 642 to 645. Let's get some cursors up here so we can look at what's going on here. This is 639, 644, and then it broke support at 649. Right here. And then it never looked back. Let's go look at where YM was at 640. Where was YM at 640? 642. It was putting in fresh highs of the day. This movement here was telling you that this was going to break. The equities on most days, if the correlations are correct and remain intact, when the equity markets are heading up, with the exception of the Russell, those algos are doing their own thing over there. I don't even really sometimes look at Russell because I don't want to get screwed up. But I'll tell you, ES, YM are in sync, like 90+% of the time. Most of the time, NASDAQ will come play to the proper correlation game, but occasionally Spazzy gets a little out of control. So I just kind of tuck her on another screen. But sometimes she moves pretty well, so you got to really watch that one. Now, over here, I'm going to ask a question on the YM chart. We can clearly see, just to answer your question, if you're thinking to yourself, well, what's he talking about? Well, if you had sell orders setting on the break of here and the break of here, you would have been filled on the You would have filled on the close of this bar right here, either with an object trader region box or with limit orders. You would have been filled short on the close of this bar right here, these bars right here, short. Came all the way down, hit the bottom, broke it. You had massive selling coming through. Look at all these red bars. This is all selling. All selling. 1,500 contracts, bam. 1,000 contracts, bam. 1,000 contracts, bam. All selling, selling. A little bit of short covering. Doesn't even dent it. Dropping like a rock. In the meantime, YM was continuing to put up fresh highs. Now let me ask this question based on what you know. Is there a long trade entry on YM? Yes or no? And if your answer is yes, where is it located? Either on the time axis here, like a time, or do you see it relative to a level? So you can type in it. So, but there might not be. There might not be a long trade on YM. There might be. That's the question. Is there a long trade entry on YM this morning after the open where you could have gotten long, and you would type in the time you think that occurred, or time area, or the corresponding level, which would be 27,000 something. I'm going to help you out for your newbies. I'm going to help you out a little bit here. I'm going to put something on here going to help you out a little bit. Okay, 5 seconds. Is there a long trade on YM this morning after the open where you could have jumped in? Yes or no? And if the answer is yes, where is it? Okay, we've got a lot of yeses. Got a lot of times coming in. We got some levels. Okay, 27,000. I see that, John. Another 27,000 for Mike. A lot of six something numbers. Okay, good. Time's up. Yeah, the entry was right here. This is the living definition of a midband trade right here. This is the living definition of it. The bars are literally sitting right on the midband. This is if you have a go-to trade in the morning, that's it right there. It doesn't get any better than that. The bars literally came to the midband and sat right on it. Now, if you said 630, I would tend to not, sort of concur a little bit there, mainly because at the time you had a shotgun. Here's 630 beginning, here's 631. So all these bars printed in a minute. That's the shotgunning of the algorithms and the buy programs right at the beginning of the market open. And so this shotgun happened very quickly. And furthermore, I would submit to you that this is the thrusting part of the uptrend move, yes? Most of you said 634 to 636, and you are correct. Time-wise, you're looking at entering the box somewhere around 633, 634 over here, and then exiting the box at around 636. So if you identified this zone and you called from, say, 27,605, I know it was hard to see that, to maybe 27,613, 14-ish, this area, anywhere if you identified that as a long trade, you were correct. Yes, that is a long entry on YM. Now, let's continue to correlate these two charts. Stand by. I need to scrunch YM down because there's going to be a lot of bars on here. I'm going to advance them together so you can see what happened. Are you ready? Here we go. All right, let's go from let's go all the way to 730. There's 730. Gold continuing to break fresh lows of the morning. We were short from up here. I had 4 lot on. I peeled 2 here. I remember I said I'm going to take part off at 82 and trail the stops down. See the trail falling on line 2 and red stealth. See it falling down, falling down, falling down. Now here's another example here where you want to be a little bit loose. If you were right on it, you would have nicked out there and missed the last part of the trade, right? 730, 733, all the way over to 735. Now let's go ahead and advance the YM chart. Here is 634, 635, 636. You're long on that candle right there at 27, 613. Okay, there's 640. There's 649, 650. Are we continuing to put in fresh highs as gold drops? Yes. Everybody see the correlation? You see the correlation? See it? Fresh highs? See if we can get all the way over to 735. 717. Gonna have to scrunch it down a little bit. 735. There we go. So that's the correlation between the two. Can you see the stair stepping up of the fresh highs on the mini Dow YM and how gold dropped very precipitously? I mean, to put this in perspective, you know, you're looking at getting in somewhere around 86-ish. And by the time you got down here, you are up 11 points. How many ticks are in a point on gold? What's a point worth on gold? Anybody know? 1 point on gold is worth how much? 1 point of movement. So if you went from 78 to 79, how much money is that worth, and how many ticks are in there? If you trade gold, you know that, right? 110, correct. So 1 point move on gold is $100, and there's 10 ticks per point. So an 11-point drop from here to here would be worth $1,100. That's correct. Yes. 11 times, and that's on a 1 lot. Okay, 2 lot would be twice that, right? Over here on the long YM trade, you went from an entry point of approximately 27,615, and by 735, you're all the way at 6. Let's use a round number, 695. That's 80 ticks. So how much is a tick worth on YM, and how much money would 80 ticks be? Well, let's see. I mentioned that earlier. What was a point worth on YM again? And what was a tick worth? What was a tick worth on it? Wasn't it something like $5? Didn't we say $5 on YM? Yeah. Okay, 5 times 80 is, yeah, 400. Yeah, 80 times 5 is 400. So there's a $400 move per contract from here to here. Now, are there other long trade entries on the YM chart? Mid-band trade entries, yes or no? And if there are, how many of them are there? I'll give you 10 seconds on this one. 10 seconds. How many long trade entries after this initial one, so not including this one? Don't include this one. I'm saying after here, the initial entry, were there more mid-band trade entries on YM? Yes or no? And if your answer is yes, the question is how many? Counting long trades on YM, mid-band long trades. 7 seconds left. YM mid-band longs, 5 seconds. Counting them. You remember where they're located, right? Okay, you got 3 more seconds. They're on here. I can tell you there's a few. You know, I'm just going to say that. I'm not giving an exact number for 2 more seconds. I'll tell you what the number is. 1 second. Get your number in. Cast your vote. Time's up. All right, well, let's count them together. So let's see. We didn't count this one. That's the first one, right? We come over here, and we can see that these 2 bars pierced into the band just above the mid-band, right? So there's 1. These bars actually wick the mid-band itself right here. So there's 2. These bars go a little bit below the mid-band into the band directly under the mid-band. So there's number 3. And then these 2 bars right here pierced into the band above the mid-band right there. There's number 4. You were correct. 4 long entries on YM between the initial entry at 634 and 735, so about an hour. On a 1 lot, you would have made approximately $400 on YM and roughly $1,100 less commission on gold for a total of $1,500 on 2 trades. Now, I would venture to say that a lot of the traders in here, that would be maybe well triple your goal for the morning, right? Now, if you hit your goal early in the first hour, what do? This is part of our training. We have some silly sayings around it. I know. Wait, hold on. Let me think. Let's see. Keep trading till you give it all back. Maybe not that. Take some more trades because you're up for the day and you're playing house money. Let's see. You're triple your goal for the day. You could leverage up and put some more contracts on. Go surfing. Go shopping. Turn off the machine. Go to sim and practice. Put on a micro. Go out and get an In-N-Out burger, Gene. I love it. You stop trading. If there's anything you remember from today, there's been a lot of good nuggets here. You got to know the trend. You got to know what type of trade you're taking, mid bands at first, right? And you learn how to entry. You get in, you look for correlations, which we help you do in the live room, right? And when you hit your goal and you're nicely green, you turn off your machine or go into sim and just simply practice and bank that coin. Go get a beer. Well, some people celebrate different ways. I'm not one to say don't have a cold one, but you might want to wait till later to do it. Tell you what, I'm going to go ahead and wrap up. I went a little bit over because I got a late start. But what I'm going to do is this recording will be on the website tomorrow morning after Gary gets out of the live room, and it will be on the members area. And by the way, all you visitors, there's a lot of visitors in here. After the live room, we have an event for you tomorrow morning at 9 o'clock. Make sure you register for that. It's really, really good. You're going to like it a lot. I hope you enjoyed my training. I'm going to turn the recorder off.